Hey guys, I hope you're doing wonderful today. If you already are subscribed, thank you so much for watching. If you aren't subscribed, click the subscribe button now so that I can bring you more quick financial videos in the future. Today I'm continuing my series of what is the stock market for beginners, and we're going to answer the question, what is a stock? Companies that are listed on the stock market are divided up into shares. These shares are called stocks. It's similar to if you were to take a pie and cut it up into 8 different pieces. Each of those pieces would be a share of the pie or a share of the company. A company might keep 4 of those pieces of pie or 4 shares and sell the other half. Each share represents a small portion of ownership of that company. When it's listed on the stock market, there's hundreds of thousands and millions of shares in a single company. And so it's just a small sliver of that company that you're owning when you purchase a stock. Normally companies will have at least 100,000 shares, and this can go all the way up into tens of millions of shares. The number of shares can change throughout a company's lifetime on the stock market. If it starts out with 100,000 shares and the price gets up to $1,000 a share, they might want to cut that price of the stock in half and say it's worth $500 a share. But now every person that owned 1 stock at $1,000 a share now owns 2 stocks at $500 a share. So you own the same amount of company, it's just the number of shares that you own that might change. The number of shares that a company is going to offer to everybody to purchase depends on how much the company is worth. If the company is worth $1 million and they want to offer a stock at like $10 a share, then they're gonna offer 100,000 shares at $10 to get to that $1 million valuation of the company. So it just depends how much the company is worth, and that is how they determine how many shares they're gonna offer and at what price they'll offer those shares. Over time, the price of the stock is determined by supply and demand. If more people are buying the stock and less people are selling it, then the stock price is going to go higher because it's at a higher demand. Whereas if a bunch of people are wanting to sell that stock and not a lot of people are wanting to buy, then the prices are going to drop because not as many people want it. Over time, there are 4 things that can happen to a stock or the shares of the company that you and I can purchase. A stock can just remain on the stock market basically forever. And there are companies that have been on there for a very long time. Somebody could also buy the majority of these shares and they could decide to take the company private again. A company can also go bankrupt and totally shut down if investors don't come in to save it and help it recover. And if this happens and you own shares of that company, you quite possibly can lose all of your money because it's very hard to get your money out of that bankruptcy after everything is shut down and there's not very much money left. The company can also merge with another company. So if you own the shares of, say, Sprint a year ago and you held those stocks for the last year, when Sprint and T-Mobile merged, your stock would have just changed into T-Mobile stock and it's just under a new name, but you should still have the same dollar amount of ownership. In the next video, I'll touch on why a publicly traded company might do each of these 4 things. I hope that this was helpful to you. Thank you so much for watching. If you aren't already subscribed, click this button right here so that I can bring you more quick financial videos in the future. Thank you so much for watching and